Hey everyone, John Henry here from School of Trade, and today we're going to be taking a look at a kind of a follow-up pattern to the spike and ledge on gold here. So gold initially started the day out. Let me get my orders in place really quick first. So we'll place a buy stop above the swing. The push really started down here at 97.4, so I'm expecting price to get back down to there. So I'm going to take 2 off there. And then for an extended target, I'm expecting the initiating push. The one that really started this move up was this spike right here. So because of that, I'm just going to be looking for the final target right about there, 95.5. We'll take 2 off there. So the way that this is setting up, gold had this really strong move up. I mean, you can see, especially when we had that spike up, they couldn't really even come back. We set up a little bit of that, a nice little channel right there, come down to the channel lows, and then it bounces through and then just rips right through those highs there. Now, because of that, that does show a lot of strength, and typically you expect that to continue. But it didn't. So we get up to these highs up here, and we just completely consolidate all the way back and forth. You can see some dojis in the mix there. They couldn't close outside of this little box right here. And then what happens, they dump right back out. Now, if you wanted to trade this as a spike and ledge, there really wasn't a good setup. The candle was just a little too wide, when it finally closed outside of the range. Just a little tough to get into that one. But looking at it in terms of that type of move where you're expecting a reversal, I'm expecting this to take back this entire spike up. Now, am I going to put a target all the way down here at 92.5? No, that's a little far. But you could expect it to come back to at least where the spiking started to happen, which is why I'm looking at 95.5 for the final target. Now, it's sort of a follow-up entry in that we've already fallen out of that spike in ledge area here. But the interesting part is we broke kind of below this sort of area of consolidation, an area of interest really, and the previous swing was back here a little ways as well, and we're starting to close underneath that, and this is really the first test of the EMA since then, so I'm just looking for this to continue to the downside. We may have a little bit of a channel kind of working its way down as well. That will be of interest, but the majority of this move is really just kind of looking for this continuation down. So the first target's coming off at 97.4, and that's going to be the first kind of big area because that's where the secondary spike came up here. So looking to take profit off there, that'll give us 15 ticks. So 2 off there will give us 30. And then looking for where the spike really started, down here at 95.5, we'll take off another 34. So all in all, because we're taking 2 and 2 off, that'll give us 34, and 34 will give us 98 ticks on the trade. It's kind of frustrating. I kind of want to move this down a tick just to get 100. Anyway, that's kind of what we're looking at right now, and we're kind of seeing that follow through. Now, conservatively, you might want to take a little bit of profit off just at the channel low, but the way that this is looking, it's anticipated that takes back all of this move right back down again. So I'm expecting a larger move back down, maybe not all the way down to, the lows, but outside of that, that's just kind of what we're looking for. Definitely where the spike started. That's kind of the primary objective all the way down here at 95.5. You might even be able to go a little bit lower at 94.5. You can see how it kind of balanced out there at 94.5. Maybe front run that a little bit and try to take some off of there, but I'm going conservative. Right where that spike happened, that's where I'm interested in taking my target off. So that's where I'm looking at right now. We're coming into our target here. Let's see if they can fill this. Maybe not. You can see they're trying right here. If not, then we'll just pause the video and we'll come back in a little bit when they finally do dig down into 97.4. But yeah, everything else is looking really good. We've got a nice channel working down. We've got the spike and ledge forming completely and working out to the tick. And then on top of that, we have a nice follow-up entry that we're in right now, just because the initial entry out of the spike and ledge just didn't look that good. So looking for continued movement down, looking to fill 97.4, and we'll see if we can get the push farther past that to get 95.5. All right, so we're back just because this. Well, I guess we filled it already. I was going to say just because we came 1 tick away from our stop or from our target, I wanted to move a stop into break even just to be a little bit safer, but we got our target filled. So looking to take our stop adjustment to 2, and then looking for the final push down to 95.5, and that's sort of the area of interest right now. We have our main target filled at 97.4. Now it's the beginning of the spiking area at 95.5, so everything's still looking great. Again, if you're a little more conservative, you may want to take profit off at the channel lows once it gets there, but generally these types of moves are going to want to take back the entirety of the move. Maybe not all of it, again, down to the low of day, but where the spike started, almost definitely. So looking for continued pressure to the downside, see if we can start cracking back down and dig down into 95.5. All right, we're seeing continued follow through the bottom of this channel, but because we are past the lows of the channel, I want to make sure to lock in some profit. I don't want to see this thing come back on us. So I'm going to lock into 97.9 just in case this channel low overshoot gives it enough room to pop back up again. If we can come down, one tick away from our target, we'll move our stop in again, or we don't have to because it's just going to fill it in one big spike. Okay, perfect. 2 times now, big spike and then a big spike right into our targets. Beautiful move down, and that's kind of what we're looking for. Now, with a spike in ledge, you typically want to enter in a little bit earlier. And I mean, in retrospect, obviously, if you entered here just blindly way away from the spike in ledge, you would have been fine. And you would have been in an even bigger move. But you just can't enter off of some kind of funky candle like that. It's too big. You want to enter in a little bit closer up here to the actual breakout of that spike and ledge. So in that case, I really don't like the entry there. But when it gave you that follow-up little entry down like this, that's really what you want to be seeing. So just a beautiful follow-up move right back down, blowing right through those channel lows, and the channel low just may expand down to, somewhere through here. But outside of that, just a picture-perfect move. 98 ticks in the bank, $980. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com, and as always, we'll catch you next time.